You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast. I guess the first podcast that certainly for me of the summer. So happy summer to you. Obviously, we've got some busy times and across the board with families and stuff like that. Hopefully, we'll be able to join you on your trips and stuff on the podcast with you. But in the meantime, let me remind you that there is a website as well that goes along with this podcast. It's wealthformula.com. Lots of different opportunities there with regards to signing up for various lists and resources, books, webinars, blah, 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 all that stuff. Check it out. This podcast is only part of it. And part of, one of the lists that you can join on there is the Accredited Investor Group, where we obviously invest together. That's what we do. It's a club that invests together, and you have to be accredited. So the name is pretty straightforward. At any rate, speaking of investing, let us talk for a moment about a question, which is what makes investors, really good investors, who they are, and or for that matter, what does somebody who's an entrepreneur who has got like all these creative ideas or whatever, what makes them tick and what makes them good at what they do? And certainly that's a big question, right? Because there's a genetic component, there's a personality type, there is opportunity, there's a good idea, there's supporting cast. But one thing that I think is critically important for people who are investors or whatever that are very successful, or at least certainly a common denominator that I've run into, is that they have a really broad knowledge base and a lot of curiosity, like in the sense of, being interested in a lot of different things, knowing a lot of different things. It goes back to this whole thing that people talk about how Warren Buffett reads so many books. Apparently he used to read like 800 to 1,000 pages every single day early on in the early days of Berkshire Hathaway, and apparently now spends about 80% of his time reading as well. Bill Gates, he supposedly reads at least one book a week and all nonfiction. He's just trying to learn stuff. He's learning new ideas, right? And they're not like reading books about finance or reading books about all sorts of things, about the world, about ideas and philosophy and medicine and the arts. And, I think it's funny because on a much smaller level, I believe that my broad background as a student of history, as a medical doctor, a macroeconomic theory enthusiast, these things have all played a role for me personally to give me a larger perspective in the world. And it's what's involved in part with my investments. It's how I see the world, right? And a good example of that, how broad perspective changes things. Just take, for example, the current inflationary environment. Most of us are probably not old enough to necessarily have experienced what it was like in the 1980s. I was a kid, so I didn't know what was going on. But understanding the similarities and differences between what happened then and what's happening now, it certainly provides perspective on an otherwise unpredictable world, right? That's a knowledge of history and of reading of what happened in the past because, and again, it's just history, but history, it may not repeat itself, but it certainly rhymes. And if you know it, it gives you a different perspective on the world. History is not the only thing that can teach you about the world, of course. I take lessons from my days as a surgeon and understanding the idea of economy of movement and less variables and all these types of things to navigate the world on a daily basis. Anyway, the more you learn about life, the larger arsenal you'll have to confront the problems and challenges of life, both professionally and personally. And I truly believe that. My guest today is an interesting guy. He is truly sort of a man of arts and letters. His name is Vitaliy Katznelson, and he is known as a very, very savvy investor. However, he is also got an interesting background, and it was a lot of fun to talk to. So when we come back, Vitaliy Katznelson. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Vitaliy Katznelson. Vitaliy was born in the USSR, immigrated to the United States with his family in 1991. He joined a Denver-based value investment firm, IMA, in 1997, ultimately became chief investment officer in 2007 and CEO in 2012. Now, Vitaliy is also known as a writer, and he's written 2 books on investing previously, Active Investing, and the little book of Sideways Markets, which we can talk about. And also, most recently, a game that's not necessarily just about investing. It's called Soul in the Game, which has gotten rave reviews from some very big names, not only in economics, but in the arts. So, Vitaliy, welcome to the show.
It's my pleasure. Thank you.
I want to start out, because this is a macroeconomic, personal finance type show, focusing on sort of your specialty, because, as most of my group, I think, is, they're either into real estate investing or maybe they have some money in the equity markets, but they're not really actively managing anything. And so there's a lot of terminology, a lot of lingo that goes in to various types of investing. How do you describe value investing? And I know that you have in your book described it with an analogy with Fiddler on the roof. If that's something you're willing to do, it may help us, less sophisticated individuals.
I'll give you a kind of a more colorful story about this. So in 2006, I was teaching, in addition to being an analyst, I taught an investment class at the University of Colorado. And this was my 6th year teaching a class. And I kind of, at this point, I stopped preparing for lectures, because if I prepare for lectures, I would just not be interested. So I just, so I would come to lecture, open what the syllabus say, and just start talking. So I show up to class one day, and it says I have to talk about discounted cash flow analysis. And so I started talking about, and discounted cash flow analysis basically is the foundation of investing, not just value investing, any kind of investing. If you're a real estate investor, that should be foundation of your investing as well. So the analogy I would use was, if let's say you're a farmer and you're about to buy a cow, and you need to figure out how much would you pay for a cow. And then you start looking, so what you have to do, you have to identify the cash flows that the cow will generate for you, as a farmer. And it's very simple, right? For the most part, you'd see, it's going to produce your milk for 6 or 7 years. So, and then it's going to have a terminal value, which is basically when the cow, either you take it to a butcher or to a petting zoo, your choice. And and then you start looking at risks. Okay, what are the risks of these cash flows? Well, you could have fertilizer prices going up. That's a risk. Milk prices may decline. That's a risk. And you start looking at risks, and you start trying to identify what are the worst case cash flows, what are the best case cash flows, what's the worst case terminal value, what's the best case terminal value, and that gives you the range of values for a cow. And the reason, so this applies actually to any investing. If you, in fact, I would argue that value investing is very, very similar to real estate investing, unless you are just buying houses just to sell them, a week later or 2 weeks later. Then you're just looking for greater fool to buy a house right away. But if you're buying a house and you look let's say you were going to rent it, right? Then you start looking at, what's going to cost you, what cash flows it's going to generate for you. And you start looking, okay, well, is that return I'm going to get, is it going to be greater than my cost of capital? So this is, if you look at the kind of basic tenets of value investing, they, in fact, they are incredibly similar to real estate investing, kind of an intelligent real estate investing. Let's talk about this. First of all, you have a long-term time horizon, okay? Which is in real estate, you're kind of forced into it because you can't just buy and sell right away. It takes time, okay, number one. Number two, you analyze stocks, not just pieces of paper, but as businesses, Okay, because what happens in the stock market, this daily liquidity, it's a bug and a feature at the same time. It's a bug because it's a feature because it gives you the ability to buy and sell very easily with very low transaction costs, which I'm sure real estate investors would love to have that. However, it's a bug because it turns a lot of investors into gamblers. And then and there's more, but the third one I think is very important. You look for margin of safety. When you're buying a house, which let's say you're going to sell in a couple of years, you want to make sure that you buy it at the price that, in the worst case, if the market is not going to be as good, or if the economy goes into recession, you're still going to be able to sell and at least break even. So that means when you bought it cheap enough, so you have margin of safety. So those are kind of the tenets of value investing, and so they're very, very similar to to intelligent real estate investing as well.
When you buy stocks in publicly traded markets, again, as somebody who's not in that space, right now we hear a lot about how the valuations are kind of off the charts. Is that, is there, I mean, is it, are you using sort of relative, terms to make decisions in stocks right now? Or are you as a value investor just looking at things and saying, oh gosh, there's really just nothing to buy right now? And I'm just curious on how that works. Cause tell me that.
So there are two questions in this actually. One is, do I use relative valuation tools or absolute valuation tools? And the second question is the market, can I still, in this very expensive market, can I still find individual stocks? So I'd argue, and actually in my books, both in Active Value Investing and in a little book of Sideways Markets, I discussed this. In the environment we're in today, relative valuation tools are very dangerous. Because relative valuation tools are basically tie the value of the, you're basically saying this asset is cheap because it used to trade at higher valuation and now it trades at lower valuation, therefore it's cheap. The problem is when the value of the past was set by low interest rates, this value may not be the same, that value may not be the same when interest rates are higher. So you want to buy an asset when we value assets, you want to value them on what is it worth in a semi-normalized interest rate environment. So that therefore you start switching. So we spend very little time. I mean, I glance what it used to trade in the past, but to me that's a very weak in itself. It has a very little information. Mostly we spend a lot of time looking at what is the asset worth in absolute sense, and then we want to buy it at the discount to what it's worth. So that's quite,
How difficult is that to do right now? That must be quite difficult to do right now, though, to buy things at a discount. Is there?
Think about this. So there's in the United States, I don't know, there are 3,000 or 5,000 stocks. Globally, at another 10,000. I'm kind of generalizing. So in my portfolio, I only need 30. So therefore, and this is like to answer your second question, I think overall the U.S. markets are very expensive, even despite the recent declines. European markets are not as expensive, and European markets are less expensive. So we look globally and trying to put portfolio of 30 stocks that still have margin of safety. So we have about 60% invested. If you look at our portfolio, about 60% in the United States, 30-40% European stocks. But again, I just like think about it. If you needed to buy a house, like you're a real estate investor, and let's say you can buy a house anywhere in the United States. I'm sure there are markets like in Florida and California that's probably extremely overvalued. But I'm sure there are markets, I don't know, in the Twin Falls, Idaho, nobody cares about them. And you can find, and you can buy a house, you can find a house that trades at 60 cents on a dollar. Okay. So you just have to be very diligent and very patient.
Got it. Let's shift a little bit over to, the the new book because it sounds like it's getting a lot of really great reviews. The book itself is called Soul in the Game: The Art of a Meaningful Life. Why did you write this book?
So that's a great question. So I almost have to give you kind of a background how I started writing. So I started writing in 2004. The street.com was looking for financial writers, and I found myself where I wanted to give it a try. So I started writing for the street.com, and I fell in love with writing. I found that I discovered that this is something I really like doing. And for a long time, I just wrote about investing. And if you think, I had all the reasons to do this because I had a graduate and a graduate degree in finance. I had a CFA, and that was my day job. But over time, but I would write these articles. And so I started with street.com, and then would write for MarketWatch. I would write for Institutional Investor. I wrote for Financial Times and other publications. And I would take these articles and send it to my friends. And first, my list was literally 20 people. And in the beginning of the article, I would start talking about my personal life, and I would just maybe have a few paragraphs. Over time, my articles, these emails turned where I spend a lot more time talking about my personal life, and my reader base expanded from 20 people to 100,000 people, and I started to get emails from readers saying, Vitaliy, I actually came to reading your articles because of your investment insights, but I'm staying because of what I learned about life from your life articles. And so I've been writing for almost 18 years. And over the years, I wrote a lot of articles about life. And my readers encouraged me to turn them into a book. And I always resisted that because I'm a money manager. I'm a money manager who's supposed to be writing about investing. And then in August 2020, I wrote this. In addition to love for investing and writing, and love and writing about life, I love classical music. So I write a lot about classical music. So I was writing this article about Tchaikovsky, and Tchaikovsky wrote this sextet for violins, which is basically a piece, composed for strings. And I read memoirs of Tchaikovsky where he struggled writing this piece, and I realized that the struggles Tchaikovsky experienced composing it are very similar to any writer goes through when he writes. This is it's universal because it's a creative activity, and any creative activity has a lot of there is a lot of doubt, a lot of frustration, so I wrote this article basically saying, this is what I go through as a writer when I write. And when I finished writing, I realized that my experience, my struggles are very similar to what other people face as well when they write. And then I looked back and I realized over the years, there was so many articles that if I actually can put them together, I can turn them into a book that would help people. So my initial reason for me why I started writing the book was very idealistic. I just really wanted to help people. And then so I put my essays together, and I was going to self-publish them. I got an email from Harriman House, which is a British publisher, who I talked to a couple of years before about it, writing an investment book. They asked me, how's that book going? And I said, well, I don't have that book that I was going to write, but I have this new book idea. I sent them a collection of my essays. And to my surprise, they said, let's publish it. So now I was a bit shocked because I started to question their sanity. So I went to a few of my friends. I went to Morgan Housel, and I went to another friend who published the book with them, Lawrence Cunningham. And I said, what do you think of this publisher? They said, they're great. So anyway, this is how this book came about. And this book is basically has 5 sections. I talk about, at the beginning, autobiographical. Then I talk about my self-improvement journey. Then I talk about Stoic philosophy. Then I talk about creativity. And then I talk about classical music composers from Tchaikovsky to Chopin. And then I kind of, to my surprise, I take all these concepts and bring them, and some of them, I kind of bring them all together. That how to actually have a meaningful life, having all this in your life, creating creativity, self-improvement, all these things.
Well, there was one, I guess, during this process you discovered, or you really got into Stoicism.
Yeah.
Talk a little bit of what exactly is Stoicism? What about it attracts you, and ultimately, like, how does it all relate to your personal and business life now?
I heard a lot about Stoic philosophy over the years, and I've seen quotes by Epictetus or Seneca or Marcus Aurelius, and they always sounded very intelligent and very smart. And then there was this one concept I read that completely blew me away. And that's really, in fact, I was almost done with the book, and I stopped writing the book. I emailed my publisher. I said, I really want to write about Stoics, so let's postpone deadline indefinitely until I finish writing about Stoics. So Epictetus, let me talk about Stoic philosophy. It's a ancient philosophy that's about 2,000 years old.
Mm-hmm.
And that was started by Zeno. Zeno was a very wealthy trader, a merchant trader, who basically lost his ship in the shipwreck. So he went from being very wealthy to very poor overnight. And he started this philosophy in Athens, in a place, he was basically, I can never say the name of the place, but basically it's called Arch, in Stoa. And that's how Stoic philosophy came about. He was the founder, but we know a lot less about him, but we know about his followers, which is basically Epictetus, who was a slave, Seneca, who was one of the richest people in Rome. He was advisor to emperors. He was a senator. He was a playwright. And then we have Marcus Aurelius, who was the emperor of Rome. So those are basically the founders of Stoic philosophy, or at least their writings are the ones that survive to this day. Okay, so Epictetus was a slave, and he had this concept called dichotomy of control. And that's really what attracted me to Stoicism. And he basically says there are things that are up to us and there are things that aren't. And the things that are up to us is what we do, what we can do. Everything else is external. So in your life, let's say you're studying for an exam, or what you can control is how much you study, how well you study, how much you prepare for the exam. Okay, you can control your effort of that. The result you get, you have zero control over that. Okay, so you have control in preparation. You can try to do the best. When you show up, like I remember I took a CFA exam. I had some control over how well I slept before the exam. At least I could put in an effort to have a good sleep. Okay, I could bring 2 calculators to the exam, so I had but I had zero control if there's going to be air conditioning in the room or not, if there will be noise in the room or not. So all those things were external. So and this applies to this internal external applies to everything we do. When people are rude to you, there is nothing you can do about that. That's external behavior. What you have control over, how that impacts you and how you respond. So that's an example of Stoic philosophy, and it's much richer than that. It's a very rich philosophy.
So tell me, though, that there was something specifically that seemed to have some philosophical piece that really resonated with you. What was that?
I realized the Stoic philosophy could provide me, could reduce the volatility of the negative emotions in my life.
Right.
If I start looking at things that this is under my control, this is not under my control. So just very quick story. I just came back from New York, and my daughter and I took my son to a birthright trip to Israel. So we had to drop him off in New York, spend 2 days there, and then he would go to Israel. I bought tickets for a plane, and so our plane was supposed to land in New York at 5:00. At 8:00, we bought very expensive tickets to go Metropolitan Opera. The plane landed on time, but then it ended up sitting on tarmac for 2 hours because of thunderstorms. There were all the gates were closed, so we could not get off the plane. So if I'm late to the opera, we'll lose a lot of money. So at this point, I could either start freaking out and get nervous, etc., or I could basically say there's absolutely nothing I can do about this. I could worry about this. I could get frustrated. I could yell at the flight attendant. It's not going to make a difference. Or I can just basically accept the fact that's not up to me, and all I can do is just try to do the best job I can, get to the opera on time. If I can make it, I'll make it. If not, well, there's absolutely, either I worry or not, the outcome is still going to be the same.
Right.
That would be an example of that. So, because the only thing I could control is my behavior or how I interpret what happened to me. And at the end of the day, we actually ended up not making it to the opera. But Metropolitan Opera was kind enough to refund us the money, actually, which was a nice surprise.
Yeah.
But again, that's an example of how my behavior, where it just reduced kind of the volatility of my blood pressure.
That's funny. I feel like that's been sort of my philosophy the last couple of years, and I thought it was just because I was getting old, but maybe I'm an underlying Stoic, and I didn't realize I was.
Well, but you know what's interesting about Stoic philosophy? You read this, and it's been written 2,000 years ago.
Yeah,
and it sounds like it could be written yesterday.
Right.
Because humans really don't change. We have new fancier tools, but at the end,
emotions don't
humans.
Change.
Yeah.
Absolutely. Yeah. Speaking of emotions, the last time we tried to connect, it was right at the beginning of the Russian invasion of Ukraine.
Yeah.
And I know that affected you very much. And I'm curious if you can kind of give us a little bit of, what that experience was like and relate it to some of the philosophies that you've been talking about.
Yeah, well, I think this is where I failed. My Stoicism failed me completely.
Yeah, right.
No, actually, it's kind of funny. You and I were going to meet. It was scheduled weeks before the invasion, and I remember I look at my calendar and I have a podcast scheduled. And I show up to the podcast, and you start asking me questions about investing, and I realize that my brain was so overwhelmed. I was so overwhelmed what's going on in Ukraine. I just talking about investing felt so irrelevant. It just,
sure.
At the time. And so I was born in Russia, and I left Russia in 1991 when I was 18 years old. So what's important to understand is when I was for Russians, World War II was an incredibly dramatic experience. 20 million Soviet Union citizens died during that war. It's important to say Soviet Union, not just Russians, but Ukrainians, Belarusians, right, and the Moldovans, etc. For Russians, May 9th, which is the Victory Day, is the day that is, the World War II ended almost 70 something years ago. That day is still celebrated today as if it was, as if it just happened a few years ago. So the reason it's important is that because I grew up hating Nazis. I grew up hating Nazis because they came to my country, they killed millions of people, and it was unprovoked. It was unprovoked attack.
Right.
Okay. Now I look at what Russia I looked at Russian behavior towards Ukraine, and I realized Russian behavior is no different from Nazis. And to me, it was shocking. I was just in complete shock because Ukrainians did absolutely nothing to Russians. And the first, and then what was interesting as I watched the war develop, then I suddenly started to see that Ukrainians could actually win this war. And before the war, there was a kind of this assumption that Russia had this huge army, well-trained army, etc. And what we saw that the army is not well-trained, that the strategy is very flawed. One thing I learned, that they had 5 different generals conduct 5 different parts of the army, with very little communication between each other. We started seeing that the tanks are like their supply lines were not very good, and so they would just leave tanks in the middle of the road because they ran out of gas. And the most importantly is that Ukrainians fought. Because Ukrainians fought as if their country was invaded by Nazis.
Sure.
And what we discovered, that when Putin basically said, 3 things before the war that did not exist but exist today. Number 1, he was saying that NATO was this anti-Russian alliance that wanted to fight Russia. Well, in reality, that was not true, because NATO was basically a sclerotic organization that didn't have a purpose, because it didn't have an enemy. So Europeans did not feel like they wanted to spend a lot of money on the military because there was no purpose for that. Well, today NATO is a very different organization.
Right. Well, then all the Finns and the Swedes and everybody who is neutral, all of a sudden feels like there's an enemy that they need protection against, right? So that's the paradox.
No, that's exactly right. No, I think that's exactly right. Number 2, I would argue, and I can't prove this, but I'm probably right about this. If Russia did this invasion in 2014, it probably would have turned out the way Putin expected it, to happen in 2022. Because at the time, 2 things. First of all, Ukraine did not almost had a very, very small army. Number 1, and number 2. Ukrainian identity as a nation did not really exist. It was still kind of looking, it was still kind of a Russian-Ukrainian identity. But after 2014 invasion, where after Russia took Crimea from Ukraine, after the war in the Donbass and Lugansk, that actually created Ukrainian identity. And we can see this very clearly because Kharkiv city right next to Russian border, which is probably 65% kind of you would call Russians. Mm-hmm. The Russians in the city look themselves as Ukrainians fighting against Russian army. So the Putin basically has created the Ukrainian identity that did not exist to that extent, at least, before the war. And number 3, Putin for a long time was talking about 5th column in Russia, where there is a lot of sleeper cells, etc., that kind of enemy of the states are there. And I don't know if it's true, if it was true or not, but we didn't see that. We didn't see any actions by the 5th column. Well, now we see there are explosions happening all over Russia. Like there was airport very far in Siberia that was blown up. Which is. It seems like it's the Russians kind of rebelling little by little against kind of their government. So anyway, so this is where we are today, and as I look at this, but I'm still shocked that there is a war happening between Russia and Ukrainians, because when I was growing up in Russia, what's important to understand is that there was very little difference between, like ethnically, between Russians and Ukrainians, or Belarusians for this matter, because if you see Russian or Ukrainian on the street, you would not know the difference. And in fact, it's probably as close as you get to civil war, because they share the same culture. The Russians, Ukrainians have a very similar culture. Probably almost every single Ukrainian speaks Russian. So it is. I just could not imagine this war happening.
Right. How does going full circle, I guess?
Mm-hmm.
Tell me how this conflict, how it all feeds into what you do in your day job.
There's a saying, we worry macro and we invest micro. So as an investor, I have to be aware what's going on in the world, in the economy, global economy.
Right.
And then I have to take this, and when I make decisions on individual companies, I want to make sure the companies I invest in are going to survive anything the global kind of the economy throws at them.
Sure.
Right. And so even before this conflict, we were struggling from inflation, right? And we had some of it was kind of short-term inflation from supply chains. Some of that was a longer-term inflation that you can argue was caused by labor markets. Interest rates were already going up before this, which is very inflationary. Because when interest rates go up, the cost of everything that has to be financed rises. So that's inflationary. While the war in Ukraine added more to this worry, because now you have fertilizer prices are going up, doubling and tripling. So think about this. So basically two major fertilizers are nitrogen-based and potash-based. Belarus is the largest exporter. Russia and Belarus are the second and third largest exporters of potash, which is used for fertilizers. Mm-hmm. And nitrogen, which is another fertilizer, is based on natural gas. So natural gas prices have doubled, because of the war. So because remember, Russia is one of the largest producers of oil and natural gas. So it's produced about 11 million barrels a day out of about 100 million barrels a day consumption globally. So about 10%. So as the West placed sanctions on Russian oil, and over time reduced consumption of Russian natural gas, that means oil prices will stay at elevated level, and so will natural gas prices. So the higher fertilizer prices means that we're going to have higher calorie prices, any calories, that be meat, milk, corn, mm-hmm. etc. globally.
Sure.
And that's going to impact, what we find is that the food prices impact richer countries less than impact poor countries. So I'll give you an example. In Ukraine, about maybe 40% of discretionary income goes to pay for food. In the United States, the number is close to 8%, down from 17% 30, 40 years ago. So as I look at the portfolio construction, we are being basically own companies that are delinked to the health of the economy. So in other words, we own a lot of companies that are, we own a lot of defense companies. We owned them before the pandemic, before the war, and we added more to them when the war started. We own companies, pipelines, or companies whose health is basically, it doesn't matter what's happening to the consumer, what's happening to the economy, the demand for their products is not going to change.
Right.
And also, since we are facing an inflationary environment, you want to own companies that have pricing power.
Interesting stuff. We could talk forever here, Vitaliy. You have such a breadth of knowledge and interest, but I want to make sure we let you get back to other things in life here. So the book again, the most recent book, which is getting, it's got incredible reviews from people like Nassim Taleb, General Stanley McChrystal. So congratulations on that, and I'm excited to get a chance to read it. It's called Soul in the Game: The Art of a Meaningful Life, and that's not out yet. Is that right? It's
going to be out June 22nd. Yeah.
And if there's an interest in pre-ordering that, how do you do that?
Well, you can do it on Amazon. However, if you go to soulinthegame.net, you pre-order the book on Amazon, go to soulinthegame.net and email your receipt. We'll send you 3 chapters from the book, so you can start reading today, and 4 bonus chapters that I wrote after the book was published. So it's soulinthegame.net.
Got it. And then if people want to learn more about you on the business side, how could they do that?
I would suggest they subscribe to my articles first on contrarianedge.com, contrarianedge.com, or listen to my podcast on investor.fm. And then after that, if they can, if they want to reach out to us, they can. But I would start with my articles first.
Sounds good. Vitaliy, thank you so much for being on Wealth Formula Podcast. We'd love to have you on again at some time in the future.
Buck, thank you so much. It was a lot of fun. Thank you.
Be right back. Welcome back to the show, everyone. Hope you enjoyed it. And again, I think the moral of the story here is a broader background, lots of different interests, curiosity about the world. These are things that will make you better at navigating the world. So I highly encourage you to, continue reading not only about real estate and economics, but about all sorts of other things, because these ideas ultimately will, help shape your intellect. And that's really important in the big scheme of things in investing. Anyway, that is it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.